In this short video, I'm going to give you the truth about buy-to-let property in 2021. Hi, my name is Mark Lloyd. I'm co-founder of Property Master Academy and a professional property investor for over 15 years. At a time when stock markets are very volatile, saving rates are very low, those with lump sums are looking to alternative forms of investment, such as buy-to-let, and particularly with the extension of the reduction in stamp duty until the 31st of March this year. In fact, according to figures released by the Financial Conduct Authority, buy-to-let lending was already increasing from 2019 before the Chancellor introduced the stamp duty reduction. Clearly, buy-to-let is considered to be an attractive investment by many people. But what with the tax changes, the increases in mortgage rates, is it still an attractive investment? Just as mortgage lenders are cautious about lending to first-time buyers, the number of deals available to first-time landlords has also reduced during 2020. Will we see the same in 2021? During 2020, the number of available mortgages for first-time landlords dropped substantially, in fact by over a third. In addition to that, rates for first-time landlords have also increased. Only by a small portion, a couple of percentage points, but those couple of percentage points actually equate to quite a high percentage. I think we're talking roughly from about 2.8% for a first-time landlord up to just over 3%. That happened during 2020. First-time landlords looking to invest in property may also be disappointed by the price increases we saw in 2020, ending the year at over 6% annual price growth. A lot of that was caused, of course, by the pandemic, where the pent-up demand, but also that was increased by the Chancellor reducing the stamp duty level as well. But having said that, what is due to happen in 2021? Well, the furlough scheme is due to end in April. Now, when that happens, it is expected that unemployment will rise quite substantially. We're also expecting the stamp duty holiday to end in March as well. What will that cause? Well, the last time the Chancellor tinkered with the stamp duty rates, it caused a drop in the property market, particularly in the southeast. And I think we will see that again this year. That, coupled with the furlough, will also mean, I believe, a drop in prices. So could that create opportunities for the first-time landlord? Whilst rising prices, a reduced number of buy-to-let deals and increased mortgage rates for first-time landlords might question whether it is a good time to invest. But when comparing different types of investments, how does buy-to-let stack up? Buy-to-let is not considered a short-term investment. It's something you're investing for the long term. So a number of different factors you want to take into account. It's totally unlike the stock market, which changes day by day. If we take a look at London as an example, rents there have been falling. Why? Partly due to the pandemic again. People are realizing that they can work from home. But also, people are looking for extra space, and there's been a migration away from the larger cities where people are looking for gardens in particular with their properties. As a long-term investor, you should always be looking at what is going to happen over the longer term, not in short-term price fluctuations. Now, whilst I agree the price rises in 2020 of over 6% was unexpected, it doesn't really matter when you're looking at the longer-term growth of house prices. If you have money available now and you find a good deal in buy-to-let, I would suggest you buy it now and don't wait, because we don't know what's going to happen around the corner. What if you're an existing buy-to-let landlord? Is buy-to-let still going to be a good investment in 2021? Well, looking at the mortgage rates, despite the fact they increased for first-time landlords in 2020, they actually decreased for existing landlords. And again, only by a small amount, roughly 5 to 10% below previous levels, but we're still looking at very good rates. When you compare that to the rents achievable, an average buy-to-let will still give you a very good return on your money. As well as this, you will have also benefited from the growth in prices during 2020, although if you've invested in London, clearly you will have seen rents reducing as people move out of the city. But rents outside London have continued to increase. And if rents continue to increase and mortgage rates remain low, then buy-to-let could be considered a really good investment for the long term. Landlords who have been investing for some time will have seen a number of tax changes over the past few years. In particular, the removal of mortgage interest relief for those properties held in your own name, and of course, the original increase in stamp duty for buying an additional home. However, the savvy landlords have looked to restructure the way their property portfolio is held, and many have moved those properties into a limited company where the mortgage interest relief can still be deducted from profits. As a long-term landlord myself with over 60 properties, a large number of those in the buy-to-let sector, I see buy-to-let as an extremely good long-term investment. It outperforms the stock market and many other types of investment. So for me, it's definitely buy-to-let is the way forward. If you've enjoyed listening to this video and you want to hear some more, then please hit the subscribe button below. You'll be notified when the next one becomes available.